Welcome back, investors, to Ticker Time News. I am Adam. Thank you for joining me for the After Hours show. I am glad you are here with me today. We've got a bunch to talk about. There seems to have been a buy the dip mentality in today's market. There was a lot of green across the board. Indexes were up. NASDAQ did underperform, but we'll talk about it all. Plus, we've got some deep dives that I want to get into, like Snowflake, who just shot up 15% today. That was incredible. This was a stock that was down under $300 just a couple of months ago, and now it's up to $360 a share. So that's a pretty aggressive move for Snowflake, and it was a very important quarter for Snowflake too, but we'll get into that. A couple other deep dives that I want to get into today, but of course, the most important thing, what's on your mind? If you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. So with that said, let's just go ahead and get right into it. Stocks did rebound today. Is this a permanent rebound? Is this a permanent bounce? Or is this a temporary bounce? Are we going to have more pain tomorrow? Is this going to be a pinball effect for the market over the next week or two, or however long it may be? Or is this really the next leg of this bull market? We are not sure. I don't know, but we'll have to wait and find out, right? So with the markets being up today, it did snap 2 consecutive sessions of sharp losses amid, like I said, a buy the dip movement as the WHO's chief scientist suggests that the vaccines are likely to hold some protection against the new COVID-19 mutation. The Dow Jones jumped 1.8%, and the Russell 2000 was up 2.7%. It outperformed the benchmark index, while the S&P 500 was up 1.4%, led by gains in stocks that benefited from economic growth, such as travel stocks. We have besides Snowflake, we've got BJ's Restaurants. They were up 12% today. We've got Kroger, which is a grocery store chain. They were up 11% today. We've got Ruth's Hospitality up 9% today. Delta Air, Spirit Airlines, Carnival, they were all up 9 point something today. You've got Hawaiian Holdings, Caesars Entertainment, Robin Hood Gourmet, which is a restaurant chain. They were all up 8 to 9% today. So a bunch of travel and restaurant related companies really had a solid bounce today. Also, Boeing shares rose more than 7% after China's aviation authority finally cleared the path for a return to service for their troubled 737 MAX aircraft. Meanwhile, the NASDAQ, it added 0.8% as tech stocks underperformed after Apple shares were under pressure after the company may have warned its suppliers that it may not materialize all of its orders because demand for the new iPhone 13 has weakened. But more on that in a moment. I actually want to go a little bit deeper on the Apple news today. On the data front, weekly jobless claims came in at 222,000, which was lower than expected and near to the pre-pandemic levels that we faced in 2019, reflecting the continued recovery in the U.S. labor market. Still, investors eye tomorrow's payroll report. Supportive factors for today's buy the dip movement include 2 things. One, a bargain hunting mindset amid an increasing number of stocks trading near their 52-week lows, like Disney, for example, or PayPal. And 2, a recognition that the S&P 500 reclaimed its 50-day moving average, which was at 45.43. We talk about it every single day. The importance of the 50-day moving average. If a cryptocurrency is above the 50-day moving average, then that's a positive or a bullish sign. Of course, if it's on the reverse of that, if it's under that 50-day moving average, that's a negative or bearish sign. Now, All 11 S&P 500 sectors, they closed higher, featuring leadership positions from the cyclical industrials, 2.9%, energy, 2.9% as well, and financials, 2.8%, with materials at 2%. Those were your leaders. The information technology section, which was up 0.8%, consumer staples up 0.8% as well, and healthcare was up 0.4%. Those were the sectors that trailed with the least amount of gains. Okay, there's your recap of the market. Let's hop over to TradingView and look at Bitcoin and Ethereum. Now, Bitcoin today has remained relatively flat in the whole grand scheme of things. It had a high of 57,226 and a low of 55,845. It is currently sitting at $56,700 right this second. And you can see in this falling wedge pattern, it is holding right along the top resistance line of this wedge. And it just can't break above it, but it's not falling really far like it did back here on November 26th, or further back November 18th, or even November 16th. So we're not seeing those big 8% moves. It has only moved today. It's sitting at a negative 0.8% on the day. That is not bad. That is flat for Bitcoin, because we all know how cryptocurrencies like to wiggle around and pinball between different support and resistance levels and really move constantly. They are one of the most volatile, I don't know. I don't know. I've lost my train of thought there for a moment. Okay, let's move off of Bitcoin and go to Ethereum. ETH USD on TradingView. There is a link in the description below for a free account to TradingView. Also, there are links in the description for lots of goodies as well. Plus, a link, the first link in the description goes to our Patreon page, where you can help support our research, analysis, technical breakdowns. But there's also goodies in there for you as well as Patreon members, like trade setups, trade ideas, buy sell signals. There's lots of other fun things in there. We even have a tier that we just created to help us build a business, a financial type of news service that is really focused on retail investors. You can help us and you can be a part of building that business with us if you choose. So that's also in there as well on our Patreon page. Okay, Ethereum right now is at 45.28, and it really didn't move a lot today as well, which is a good sign. With all the selling pressure we've had for the past couple of days, seeing it flat yesterday and today, that is really, really good that it's holding up. Now, Ethereum did break out of its little wedge pattern it had. Really, it was just consolidating, moving sideways, not really much of a pattern there. If you want to call it any type of a pattern, it might be a declining triangle or descending triangle. But really, there was no real pattern for Ethereum. But it did break above this resistance level and this price point right here of 45.45. It seems to be holding right around that line, not going too far below it or too far above it, just kind of holding right there, which is great to see. Now, the wick of the candle did come down to this old resistance line here, and it used it as support, which was a very promising and a very positive sign to see. Now, Ethereum had a high today of 46.37 and a low of 44.35. And again, right now it's at 45.26 at the moment. All right, hopping off of Ethereum and Bitcoin there, let's go through rapid fire of a few companies that reported earnings today. First up, DocuSign. Ticker symbol is DOCU. Now, this is a company with a very rich valuation that has been falling. As I tighten up this chart, this is the daily chart. So every candle equals 1 day. You can see this thing has just been in a downtrend here going back to August of this year after an incredible run up, especially after their earnings back here in June. Wow, what a run up they had there. But they have been falling off. They are below their 200-day moving average, which of course brings them under their 50-day moving average, which is a very bearish sign for DocuSign. However, the company was up 1.3% today, but it is down, get this, it is down nearly 30% in after hours. Yeah, let that sink in for a moment. So what I'm going to do here is I'm going to draw a line on where the stock is. Now I've got to crunch this up a little bit because there you see that blue, this blue rectangle over here. That's where the price has fallen to. So let me draw a little circle down here so you can see. Right here, this right here is where DocuSign is trading at the moment. All the way down there because it has dropped nearly 30% and it is falling even more as we speak. Now, they reported their Q3, their EPS was 58 cents. That beat by 12 cents. Now, their revenue came in at $545.46 million, which was a 42.4% year-over-year gain, and it beat by $14.2 million. So DocuSign beat on their top and bottom lines. Why has it dropped 30%? Guidance. That is why. They are going up against a very, very tough next couple of quarters. Now, I haven't had time to dive into their earnings report and read the transcript of the earnings call quite yet. So I don't have a lot of details on DocuSign at the moment, but it is one that is taking a big hit due to guidance right now. Just scrolling through the news feed here. Okay, nothing there for DocuSign. I was curious if there might be. All right, so if you're in this, boy, oh boy, I hope you're not because of this fall. That is a very steep decline. All right, moving off of DocuSign, I want to go to Marvell Technology Group. Ticker symbol is MRVL. Oh, I didn't type that right. MRVL is the ticker symbol. There we go. All right, they reported their Q3 earnings as well. They reported EPS of 43 cents, which beat by 5 cents. And they also recorded record revenue for a single quarter of $1.21 billion. And that was up 63.1% year over year, which beat estimates by $60 million. And boy, are investors being rewarded right now. The stock was flat during the day today, but it's up 20% in after hours. So you've got DocuSign dumping nearly 30% in after hours, and you've got Marvell Technology Group up nearly 20% in after hours. It is just crazy. Now, again, for you to see where the stock is currently trading, I've got to adjust this stock chart in such a way to squish up the numbers a bit so we can bring it down here. Up here, this blue rectangle, this is where they are trading. If I put a circle here around it, you can see they have jumped this high all the way up here. All right, so that little purple line there, that's where they are currently trading at in after hours. Right now, it's 19.75%, so it's holding up there pretty well. So they did wonderful. Another company that also did wonderful in, well, one more thing to point out here on Marvell. It's not one that gets talked about enough. Look at the stock chart. If I squeeze it up here to get all of 2021 in, they had a flat start to the year. But around the middle of May, that's when this company really started to kick in and really perform. It stayed above, or it got back above, its 50-day moving average, and it's used that as support all the way up. It had a little dip in the beginning of October and a little dip here right before earnings, but now it has just popped up, and it is way up there. All right, so moving off of them, another company that did really well, Kroger, which is a grocery store, the ticker symbol is KR. They reported phenomenal earnings here. Now, let me make sure we got 2021 in here. Okay, so this is 2021 for them. Now, they've been trading up above their 50-day average most of the year. We had this big decline right here in September. They were hurt pretty bad in September, but they were up 11% today, flattened after hours. They came in and beat EPS by 11 cents, and they beat revenue, and they also raised their fiscal year 2022 EPS above estimates. So it's looking really good. And we were talking a little bit about defensive stocks yesterday because the market was just in so much pain. What are the type of companies that you can get into to protect yourself from a decline, a bear market, that are rated as defensive stocks? And there are companies like Kroger. This would be a good example. Costco, another good example. Walmart, PG, Procter & Gamble. Any type of company that is going to have recurring revenue on the items that we as human beings use every day. We have to eat every day, drink every day, stay healthy. Those are the type of companies to invest in as a defensive play in the market. All right, we haven't checked in with the EVs in a while, so I thought we'd do that real quick here during our rapid fire session. And I'll start with Lucid. Now, Lucid and Rivian, Lucid, LCID, Lucid and Rivian were both down today. Lucid it's pinballing around up here. Let me open this up a little bit better. They were down 5.3% today. They're up 1.4% in after hours right now. And they really are holding above that 21-day moving average, which is a really bullish, very bullish setup for Lucid here. So they're basically been flat for the past week or so in trading, staying right around that $50 mark, $48, $50, $52, staying within that range right now. All right, Rivian, RIVN, they were also down today. Now, their chart doesn't look very exciting on the daily chart because they haven't been public that long. I guess we're going to start their third week, maybe on Monday, Tuesday-ish. All right, they were down 4.2%. They're down another 0.5% in after hours. $110, $105, that seems to be the range for Rivian's floor right now. And they are really starting to build support around that level. And then they're running into resistance when they get up to the $120 to $125 a share. So they're really kind of range bound right now and kind of finding their footing on where the company is going to be until we get, of course, more financial information from the company, earnings, delivery numbers, manufacturing numbers, and so forth. So it'll probably move sideways until we start to get more data on the company. All right, Tesla, TSLA, they were flat today, down about 1%. So a relatively small move there for Tesla. Now, one thing of note that's interesting is this symmetrical triangle that was being set up. They have fallen out of it now. And they are now down below their 21-day moving average, and they pretty much have been. They popped above it here on November 30th and the 29th, but they're really staying right below that 21-day moving average, which is still super bullish when you look at how far above their 50-day moving average that they are. So that's just incredible. But some of the, I guess, read in the EV sector today was probably just some investors trading, taking risk off the table, and moving it into more defensive plays, like we just talked about a few seconds ago. So that's what's going on with the EV sector. All right. Now I'm going to get into a little more deep dives on a few different companies, Snowflake, Apple. And remember, if you do have a question, just leave your question in the ticker symbol in the comments, and I will be glad to stop what I'm doing to go over it. All right, Snowflake, ticker symbol is SNOW, S-N-O-W. Investors got rewarded pretty well today for holding on to Snowflake through their earnings and their dip there before earnings. So you can see they've been in a, oh, let me fix the chart here. There we go. They've been in a really nice trading channel, ascending trading channel here, dipped out of it in the beginning of October, but then get right back into it. But then they ran into a little bit of selling pressure here going into earnings. The company was a little bit richly valued when it had popped above its trading channel right here in the middle of November. And then it really just sank and it dropped. We had a 10% drop, a 7% drop, and then a 9% drop, relatively close together. So it had fallen pretty well. But today, 15.8% is what it was up during regular session hours, and it's up another 0.5% in after hours. So here's my thoughts on Snowflake, all right? Snowflake, ticker symbol SNO, is finding itself in a winter wonderland after posting its first profitable quarter since going public in September of last year. In Q3, the company reported positive EPS even as analysts predicted another quarter of net losses. That's why this quarter was so important and amazing for Snowflake. It was Snowflake's wildest beat since its IPO last September. In further good news, Snowflake yet again doubled its productive or its product revenue year over year, and it also expects Q4 product revenues to nearly double at 94 to 96% growth. That is incredible growth for a company. Now, Snowflake made a bold claim not too while ago, maybe a few months ago, maybe a couple quarters ago. I can't quite remember now. I did a video on Snowflake back then, but they were betting on big growth, and they came out with a statement about it. And well, they're backing it up with this quarter. The cloud-based data analytics company was under quite a bit of pressure to deliver on an excellent quarter given the latest market sell-off of high multiple stocks. Now, Snowflake is trading at 77 times fiscal year 2022 sales. It has not been exempt from that action. This ultra-rich valuation was a significant factor in the stock's recent snowballing, giving up about 22% of its value since hitting 2021 highs in mid-November. That's when it popped up out of its trading channel. Even without a rotation out of high multiple stocks over the past few days, Snowflake was still priced to perfection, making its Q3 results all the more impressive. The biggest standout in Q3 was Snowflake's profitability. The company posted adjusted EPS of 4 cents, crushing estimates. Snowflake was on a path to profitability heading into Q3, as it had posted narrower losses in every quarter since its IPO. So it was nice to see the company finally deliver positive earnings in this period. A lot of this has to do with how Snowflake charges its customers. Being a cloud-based company, Snowflake employs an approach that differs from the software as a service or SaaS model. The company uses consumption-based model through which customers purchase credits based on their requirements. Snowflake has continued to increase the price of its credits, driving robust product gross margins of 74.6% in Q3. Profitability was also helped by tremendous revenue growth. In Q3, total sales leaped 109.5% year over year to $334.4 million, making the fifth straight quarter of triple-digit revenue growth. Product revenues followed suit, jumping 110% year over year to $312.5 million. A major component of the consistently strong revenue growth is Snowflake's ability to continually add high consumption customers. In Q3, the company saw its largest sequential net additions of customers, generating trailing 12-month revenue of $1 million or more so far in fiscal year 2022, tracking or taking on more than 32. Furthermore, 8 of these customers consumed over $10 million. Looking ahead, Snowball expects product revenues of $345 to $350 million, or 94 to 96% growth year over year. The primary reason for the minor slowdown in growth is a gradual return to normalcy throughout the global economy. Although the Omicron variant puts a slight wrinkle in a global path to normalcy, Snowflake noted that in Q4 last year, many of its top customers experienced massive growth, while online shopping and shelter in place were more prevalent than it is today. As of right now, the Snowflake results they expect to be a greater impact on consumption in Q4 compared to last year. Overall, despite trading at sky-high valuations of 77 times fiscal year 2022 sales, Snowflake's profitability, its repeated doubling of revenue, and its significant uptake in large customers in Q3 were more than enough to help the stock experience a solid bounce. When it comes to Snowflake, investors have to be incredibly forward-looking, especially given its multiple. However, as companies are accelerating their digital transformations while relying more and more on data operations and analytics, Snowflake's future looks anything but cold and dark, like a blizzard that it skipped and passed by. All right, that's Snowflake. What do you guys think of Snowflake? Do you think it's a company worth investing in with these high valuations and these crazy growth numbers? Or is this one just a little too rich for your taste? Let me know in the comments. Okay, on to Apple. It had some conflicting news today, but we're going to get into it. So Apple was flat today. It was down 0.61% and flatten after hours. So it's holding its level. It's in a very positive and bullish structure, being way above its 50-day moving average. And this recent run-up of all-time highs hit yesterday on December 1st have been pretty cool. Now, if we measure, I didn't do this and I wanted to, this bounce off of its 50-day moving average up to that all-time high, that was a 15.4% move. Since November 11th to December 1st, 15.4% on a company with a 2.68 trillion, with the letter T, $trillion market cap. That is a very big move. All right, now that I got that out of the way, let's talk about the news of today for Apple. So Apple shares are a bit rotten today after a Bloomberg report raises concerns about iPhone 13 demand. But then CNBC technology reporter John Fort cast doubt on that Bloomberg report, saying that it doesn't make sense to him. Says Apple and supplier Qualcomm have said demand is strong, supply is the problem. So here's my take. With supply chain disruptions already taking a bite out of Apple's sales, Bloomberg's report that the company is informing suppliers of weakening iPhone 13 demand isn't the most encouraging development. Not only is this news knocking shares off Apple, the largest component of the S&P 500 index, lower, but its supply chain partners such as I messed that one up. Sirius Logic, ticker symbol CRUS, Skyworks SWKS, and Corvo QRVO, they are also under pressure. For a market already on edge due to the Omicron variant and the persistent inflation, this report comes at an especially sensitive time for investors. A key aspect to the bullish narrative for the stock market has been that demand has remained strong across most industries, offsetting concerns about widespread supply chain issues. That storyline is taking a hit today, though, as it appears that consumers are reining in some spending while gas, food, and utility costs climb. When Apple reported Q4 earnings on October 28th, CEO Tim Cook was upbeat about the demand environment, stating that interest in the company's new products was, quote, very robust. Those positive comments helped take the sting out of an otherwise disappointing report that Apple included first revenue miss since Q2 2017. That's a long time. The top line miss was mainly driven by supply chain constraints, which the company estimated had a negative revenue impact of $6 billion. While Cook predicted that silicon shortages and COVID related manufacturing shutdowns would likely worsen in Q1 22, he also stated that Apple would still achieve record holiday quarter results, bolstered by healthy demand for new iPhone and iPad sales. That may still be the case. Analysts currently forecast Q1 revenue to increase by 5% year over year to $117.3 billion. However, the idea that last quarter's inline EPS and revenue miss was just a one-time anomaly may prove to be incorrect if demand continues to soften. Beyond the inflationary pressures that are battering consumers, iPhone 13 sales may be lower, maybe lower than anticipated, because some consumers are holding off on upgrading devices until next year. While iPhone 13 has 5G capabilities, the technology hasn't been fully developed yet, limiting speed enhancements and new 5G applications. It believed that the next iPhone will have greater upgrades than the current iPhone 13 did. It's unclear how significant the deceleration of iPhone 13 demand has been. The drop off could be relatively small, positioning Apple to still post healthy Q1 results in late January. What's concerning, though, is that headwinds appear to be strengthening as supply chain disruptions continue and possibly worsen as governments react or overreact to the Omicron variant. Well, that's my thoughts on Apple. What do you think is going on with Apple? Do you put any faith in this report that iPhone 13 sales are slowing down and supply constraints are really struggling and hitting Apple hard? Or is it just more FUD in a market that is fully engulfed in fear, uncertainty, and doubt? Let me know in the comments. All right. Another company that I want to dive deeper on is Splunk. Ticker symbol is SPLK. Let that load there for you so we're all on the same page. A mighty, mighty fall out of this nice trading channel that it was in. Now, Splunk is one we've talked about several times before because it was in this major downtrend. It had shot up to all-time record highs and then just fell off after miss on earnings, another miss on earnings, a soft earnings report, and another miss on earnings. Could this company turn it around? Well, maybe. It might be headed in that direction. Now, shares were up 4.6% today. So they did recover some of the loss yesterday, but yesterday they were down nearly 8%. So they've barely recaptured half of that so far. Now, with Splunk, I believe it is on the mend as Q3 report shows that cloud transition, well, it's progressing. It's been an eventful month for big data company Splunk, which has seen its CEO unexpectedly resign and its stock price plunge by over 30%. Today, however, the gloominess has vanished, at least for the time being, following the company's Q3 22 earnings report. Although Splunk registered a loss for the seventh time in the past 8 quarters, its loss per share of 37 cents comfortably escaped analyst expectations by 16%. However, there is a key caveat regarding its bottom line outperformance. When Splunk announced that its CEO was stepping down on November 15th, it also issued updated guidance for Q3, forecasting revenue of $666 million versus the prior estimates of $643.3 million, with the current estimates only moving slightly higher to $664.5 million. It appears that some analysts didn't update their revenue models to account for the new guidance. We actually talked about this during the live stream when the news came out. The same holds true for EPS estimates, skewing the magnitude of upside for Q3. On the top line, Splunk did modestly exceed its outlook, generating revenue of $664.8 million, up 19% year over year. A key factor that's been plaguing the stock is that its revenue growth has plummeted as it executes its transition from a traditional software developer to a cloud-based one. We've seen this before with companies like Rackspace. I did a video on Rackspace maybe a month or so ago. They transitioned from being a software company to a company in the cloud, just like Splunk. Now, Rackspace, they've got their footing, they've turned it around. Maybe Splunk is starting to show signs that it's doing the same. In fact, Splunk posted 3 straight year-over-year revenue declines in Q2 21 through Q4 21, pushing it into the red after becoming a consistently profitable company. Although its growth ticked up a little bit lower, I should say not ticked up, but ticked down a little bit lower from last quarter's 23% mark. The general direction, though, looks positive, suggesting that the worst effects of its business model shift are in its rearview mirror. On a related note, cloud ARR. Now, I've said this phrase before, ARR, and I've gotten a few questions. What does ARR mean? Well, ARR means annual recurring revenue. So that's what the ARR stands for, annual recurring revenue. But for Splunk, their annual recurring revenue, or ARR, well, it surged by 75% year over year to $1.11 billion. And cloud accounted for a record 68% of total software bookings in Q3. In addition to some relief buying following the stock's nosedive, the momentum in Splunk's cloud business is catching investors' attention, just like with Rackspace. The main frustration for investors has been that Splunk's machine data processing capabilities are ideally suited to thrive during the digital transformation trend. But the company has struggled to fully capitalize on its favorable position. Now, with a more modernized pricing model that charges customers based on the volume of data processed, Splunk seems to be turning the corner. In fiscal year 23, the company is forecasting cloud ARR to reach at least $2 billion, representing an estimated year-over-year growth of 50%. Based on its fiscal year 2022 cloud ARR guidance of 1.3 to $1.33 billion. This growth is coming at a cost as the company builds out its ET phone home, right? IT as it builds out its IT infrastructure to ramp up its cloud hosting capabilities. For fiscal year 2022, Splunk is anticipating non-GAAP operating margin to decline to between 17% and 15% from 4% in the year earlier period. Overall, it remains a mixed picture for Splunk, but the steep sell-off in the stock ahead of its earnings report was overdone, in my view at least. The company still has plenty of work to do, so don't get me wrong on that one. Its turnaround is not complete yet, and its financials are far from pristine. However, the strong cloud ARR growth, bolstered by an increasing number of large contract wins, is an encouraging development for the bell-guarded stock. All right, so that's my thoughts on Splunk. Whew, I've been talking a bunch there. So what do you think about Splunk and its transformation? Do you think that it is finally turning the page, or do you think there's still a lot of work ahead to make this transition for Splunk? Let me know in the comments. I'd love to hear from you. Okay, so that wraps up actually my deep dives today. This was a pretty quick moving episode today. If you have any questions, now would be the perfect time to plug them into the comments so we can talk about them. Otherwise, that actually does it for me for a change. We got through this rather quickly today. So while I'm giving you guys a few minutes to ask any questions that you want, I'm going to hop back over here and look at some of the winners today, some of the losers. I'm also going to check the wire service over here and see if there was any news that came in during these deep dives here. It looks like Churchill Downs, which is a favorite of mine, is said to be weighing a potential sale of betting business. TwinSpires. That is interesting. Churchill Downs wants to potentially sell its betting business. Wow. That is very interesting. Because Churchill Downs, that is a very established place. That's where one of the races are held. Well, of course, they've got a lot of races there. Let's see here. Any other big news coming across the wire service? Ticker symbol O, Realty Income. It provided a business update. It acquired properties with aggregated purchase price of $1.1 billion from October 1st through December 1st. That is interesting. So they're adding properties at this time in the housing market. That is very interesting. Wow. And they spent $3.8 billion in acquisitions through September 30th for 2021 so far. Wow, they are aggressively purchasing homes and properties. That is interesting. They must definitely see the housing market as not doing too bad. Oh, we got Riot Blockchain. They produced 466 Bitcoin in November, and that was up 298% year over year for them. So that's really good. I wonder how investors are handling that. RIOT, Riot Blockchain. Let's see how they're doing here. So they're above that 50-day move again. They were down 7.3% today. They're up 0.5% in after hours. This came across the wire after the market had closed. So I could imagine that this might do some good for Riot Blockchain tomorrow. Getting more of those Bitcoins mined. Okay, any other interesting news here? Remember, if you've got a question, just leave that ticker symbol in your question in the comments and we'll go over it. Looking for any other cool news, interesting news that we could maybe talk about. Otherwise, I'll wrap it up. Oh, here's something about Zillow. Zillow announced significant progress in wind down of Zillow offers inventory, updates homes segment outlook, authorizes a $750 million share repurchase program. Interesting. I wonder how investors are treating that. Because when we talked about this several times, when a company offers a share repurchase program, that is very positive, and it's a way that companies can take their profits and reward investors. Because when companies are uh, repurchasing their shares, they're taking shares off the market, causing the price of their share to go up. They're providing buying pressure to help boost up their share price. So it's a way to reward investors with hopefully raising their share price. It's the complete opposite of when a company does a share offering where they want to raise money when they put more shares on the market. So that's interesting from Zillow. They're up 8.2% in after hours, so investors definitely like that. But they are still, oh man, they are way, way down here on their chart. They've been undersold. I'm sorry, oversold for, man, going back to, looks like November 5th. And that was a 26.39. Remember, 30 and below is oversold. So they've been oversold for an entire month now. They got down to a low point of 19.44 on the RSI. And they're at a 26.6 right now, even after being up 8.2%. So the stock is still way oversold at this point. Now, when it's interesting that 8.2% pop in after hours, that's on top of a 2.3% boost in today's share price. Well, it is still under that 21-day moving average. It looks like it might have came up and might have touched it. It came really close, but that is still a very bearish structure on the company, being underneath their 21-day moving average. So that's something to keep in mind there. Now, it is interesting, though, if I were to extend this downtrend that they've been in for a while here, if I were to extend this line right here in the middle, straight out, and let's do this just as a bit of an exercise. If I extend this straight out, and I'm going to put it right back where it was, right there, extending that straight out, look at how that trend line, the trend line that Zillow hasn't touched since May 20th, May 19th of this year, and then they come right back down and they land on that trend line, and for the past week they've been trading on that trend line. Isn't that interesting? See, this goes to show that investors and traders, they are always using technical analysis, and everybody trades around the exact same markers. And that's what makes investing and trading using TA so much fun, just because of that fact. I mean, you can really count on these lines to help you most of the time. Now, not all the time, don't get me wrong. Technical analysis is just one extra data point that you can use when you're making your investment decisions or trading strategies and so forth. Okay, let's see here. Back on Zillow's news, Zillow Group announced that it made significant progress. All right, I want to see what they have sold. So they have reached an agreement for more than 50% of the homes it expected to resell during the entire wind down process. So they're about halfway done. So it looks like their home segment for Q4 21 looks like revenue outlook is in the range of 2.3 to 2.9 billion, and that'll be an adjusted that'll be up from 1.7 to 2.1 billion. So they're raising their revenue outlook. So that's another positive for the company. And then, of course, the 750 million share repurchase program. Those two things combined are what is what made that 8.2% jump in after hours for sure. Let's see, anything else interesting going on? Remember, if you are watching the replay of this, you can leave your ticker symbol, wow, hope, true. Okay, cool. Wow, hope, true. Nice. Those are three words to live by, right? Let's see what else. Ulta Beauty. We talked about Ulta before. ULTA. All right, nice move, nice move. They popped back over $400 today, but they hit that 21-day moving average within an after hours. That's when the real move happened. It popped above its 50-day moving average, and it's now all the way up here. Up here, this is where it's at right now. Now this is on an earnings beat, $1.46. Wow, that's a big beat. That's a big beat on earnings. They beat EPS by $1.46. They beat on revenue. Comparable sales were up 25.8%. They raised their fiscal year 2022 EPS and revenue guidance above estimates, which is really good. It was up 13%, so it has come back down from that initial jump. I can't believe that $1.46 beat. That is rare. So their Q3 earnings of $3.93 per share, which was a beat of $1.46. Incredible. Revenue rose 28.6% year over year to $2 billion versus a $1.88 billion estimate. Really nice. Comparable sales up 25.8%, driven by a 16.8% increase in transactions and a 7.7 increase in average ticket. So customers are spending more per transaction. Wow, they raised their EPS, fiscal year 2022 EPS, to $16.70 to $17.10, and that's up from prior guidance of $14.50 to $14.70. That's really nice. Really, really nice. Okay, cool. Yeah, we talked about DocuSign already. That's they just sank. So down on the guidance, right? We mentioned that at the very beginning of the live stream. The guidance just fell off. Gun sales are down too. Smith & Wesson, they missed by 16 cents and they missed on revenue. We talked about Marvell Technologies. They are looking really good and they guided up as well. Lyft and Uber both got buy ratings put on them today. All right. Well, I'll wrap up the stream here. I went through everything that I wanted to. We went through the news. So that'll wrap it up for today's live stream. Thank you guys for joining me. Make sure to check out the like button for me. That would be wonderful. Click that like button and share this video. Those are important things and they help us all. They help everybody. So yeah. So with that said, I will see you during tomorrow's live stream at 5 o'clock. Thank you for being here. And yeah, that'll do it. So thank you guys so very much, and ladies too. And I'll see you in the next video.